Good evening, everybody. It is the 18th of July, 2025, and in today's video, I'm going to be covering defining range, or better known as DFR. So this is a concept that I use in my trading pretty much every single day. And this is going to cover everything regarding DFR. So essentially from lower time frame, higher time frame, all the stuff that I use DFRs with, alongside the types of cracking correlations that DFR presents. This used to be a multi-part series, and I'm not cutting it to make one part and letting you guys go ahead and back test and forward test to, ask questions later on, in which I'll respond if there is any, right? So let's start off. Foundational information regarding defining range, right? Concepts to understand before watching this lesson. So what is DFR, the significance of it, how to use it, and how to implement it is everything I'm going to be going ahead and covering in today's lesson. Defining range, for me, is a very important part of my analysis alongside with my higher time frame and lower time frame analysis, alongside with my executions as well. The significance of it in my trading is pretty high as well. And how I use it and how I implement it is what I'm going to cover in this video, okay? So let's start off with the basics. What is DFR? Understanding before utilizing it. So DFR is the first quarter of every cycle cut into thirds, with the high and low of the second third and the third third being your defining range, in which it will be utilized for a more refined accumulation. And I put it in parentheses, accumulation range, right? DFR, unlike other stuff, is not going to be utilized on every single time frame. There are specific time frames, like everything regarding quarterly theory. You need to follow specific time frames. And if you don't follow them, you're not going to get the DFR. The reason why I say that is because if you use the indicator I'm going to provide for you guys in this video, it's not going to pop up. So not even if you wanted to, can you break those time frame alignments and still have a viable defining range, right? So going on to the significance of DFR. DFR is significant for a multitude of reasons. One being it's a time-based fib instead of it being a price-based fib. Now, before I continue on, why do I specify as the number one significance of DFR it being that it is a time-based fib instead of a price-based fib? Remember, anything on the y-axis of price can be manipulated substantially, right? You may think it can't be, but it definitely can. Meaning price can be manipulated, where we go in a certain range can be manipulated. That can all be altered by institutions, anything else. The one thing that cannot be altered is the x-axis, which is our time intervals, right? That can be changed, is the exact same every single day. That can't be manipulated, it can't be subjective. It is from this time to this time, no matter what, every single day, every hour, every week, every month, every year, okay? And as I mentioned already, it removes the subjectivity behind any manipulation or deviation that is being measured. So if you come from a standard deviation background, this might be something that I'm not going to say you might hate, but you're definitely going to see more consistency with defining range than you would off of a normal standard deviation targeting -2, -2.5. This is a deviation that is based upon the x-axis, not the y-axis. X-axis being time, right? A lot of you guys I know who do deviations or use type standard deviations cannot explain to me what a valid manipulation is, right? And that itself is fundamental. Believe it or not, that's one of the main reasons that made me go to quarterly theory. I got my eyes opened by a good friend of mine asking me what a valid manipulation was, and I couldn't answer that question. Right? There's, of course, a normal definition of that, but in a lot of cases, you'll deviate from that definition. You'll break off the boundaries that are set in stone for you to follow to go ahead and suit a narrative that you want to believe is correct. Using this concept and using quarterly theory, you cannot do that. Okay, so we're now going to go to TradingView, and we're going to go ahead and look at this. Okay, so I'm going to go over how to cover, all right, how to look at defining range. So at the bottom right, or at the bottom part of my screen, you're going to see a quarters, right? Q1, Q2, Q3, Q4. These, I changed the colors of it, so if it's difficult to go ahead and identify, or if you're colorblind, I am so sorry. I'll go ahead and specify exactly which one's which, right? So there is a certain fib tool you can use if you don't want to use the indicators. You can use a fib tool to go measure your DFR range manually. I used to do it this way, and to be quite frank with you, I saw that it was too much shit on my chart, and now that there's indicators for this, I am forever grateful because it makes my life so much easier. So this is going to be the age of DFR, right? You are going to anchor this, and I'm going to go over the time frame alignments soon. There's not a PDF for this. It's simply I'm going to say it, and you're going to write it down on your notes, right? You're going to anchor this deviation from here to here, the first quarter, the start of the first quarter to the end of the first quarter, right? This is going to be your deviation, right? Now, in this case, you are then going to go to the settings of the deviation. I'm going to show you guys something. These are the DFR fib settings, right? 0, 1, 0.67, 0.33. And this will give you the actual DFR without having the indicator on. Now, if you want to use the indicator is this one right here. It is called Triad Quarterly Theory Profiler Public. I alter these a little bit right here, in which it allows me to go ahead and, suit my own little style of trading, essentially, right? Now, important things regarding DFRs or defining ranges. Number one, defining range, okay, has its time frame alignments. If you want to spot, and make it a rule of thumb, if you want to spot a specific time frame alignment or a specific DFR for a certain cycle, use the correlated time frame for that cycle. Meaning, if you want to spot Asia DFR, you are going to utilize the 15-minute. If you want to spot 90-minute DFR or New York Open DFR, whichever one, and I'm going to cover that as well in this video, you're going to use the 5-minute. If you want to spot weekly cycle DFR, you're going to use the 1 hour, monthly cycle, 4 hour, so on and so forth until you reach the max limit. So I already gave you guys the indicator and measured it the exact same, right? The way I use DFRs, there's two things that I utilize for DFRs, two very important things that I look at for defining ranges. And it is the high and the low of the defining range and the projection of the defining range, right? -1, -1.5, 2, 2.5, right? The -1 and the negative, or the -1 and the 2 deviation are the deviations that they gave, and the -1 and 1.5 and the -2 and 2.5 are the deviations that a man named Medic made, which is basically just, instead of giving it a certain level, it's kind of like a little area in price that you kind of want to see a valid manipulation, right? So in terms of using the DFR deviations, and I'm going to start off with this and then start off with the highs and lows. When you are looking at the DFR deviations, what's the objective of these deviations? Usually, if these deviations are not, for example, if we're not at all-time highs, right, and you want to find where price may reverse, you would look at these deviations to host those reactions, meaning right now we're at all-time highs on NQ, and if you're looking for a reversal back down short, you would do the -1 deviation of the current daily cycle DFR, in which it will present a valid area of manipulation, which you should have resting under it or above it, depending on the range, a area of sell side or buy side. So in this case, we have an area of buy side resting just shy under the -1 projection of the DFR, right? In which you can now see price manipulate up, take out the level of buy side, as well as taking out the defining range projection, and then hosting a reversal back down to where? Our other projection, which also lines up with yesterday's 4 p.m. candle closure low. So that could have been your target as well for shorts, right? We manipulate above, and then we tap into that DFR -1 deviation. This DFR -1 deviation, and I should mention this now before you guys start doing it, you are not supposed to pattern trade these. They need to make sense with current market structure and with the Kraken correlations, as well as you shouldn't limit the actual DFR projections. The DFR projections will act as an area of liquidity if there is none above us or under us, but at the same time, I will tell you that limiting it will not always give you the best results. Wait for Kraken correlations to form, or wait for your entry model to form off of that projection being obtained. Now, that is how I use one way of DFRs, right? Where I use a projection of the DFRs. I mainly use the projections for two things: weekly cycle and daily cycle DFR. And I don't use too much of the projections for the weekly cycle. I predominantly use it for the daily cycle and daily cycle only. That is just the way I do it. Some people like stacking it. I used to stack it. I fell off of that. I didn't like doing that. And I simply realized that utilizing the daily cycle DFR projection is pretty much all I need for price, right? So going on, continuing forward, what are some other forms that you can utilize the actual DFRs with? Well, I utilize the DFRs as well as the actual high and low of the DFR. In this case, it's not going to show it, but I look at the DFR high and lows to maybe see daily cycle sequential SMT form between Asia and London. So remember that if the DFR range low is the low of Asia or low of Q1, or is the high of Q1, depending on what it is, that can also give you an area of confluence for reversals. In this case, we don't have it here, but if hypothetically this was Asia's low, right? DFR was Asia's low, and London manipulates and we create daily cycle sequential SMT off of that, you can look for now the current intermediate high that is presented in price to be rated as your objective, right? So I look at DFR high and lows, the physical high and low of the DFR instead of the projection, the actual presented high and low. I use those for sequential SMT or Kraken correlations. What type of Kraken correlations, you may ask? Candle closures above or below the current range. So I'm going to give an example. In this case, DFR right here, this is the DFR. Notice how NQ doesn't close under it, and notice how YM closes under the DFR and how ES as well closes under the DFR. This is a DFR Kraken correlation in price in which two asset classes close under and one fails to do so. This can present a lot of the time when price is not done manipulating, or price is more likely to reverse to then hit our intermediate term high or low before distributing lower to its objective, right? When you see these type of Kraken correlations, these are small little fingerprints in price you can identify, maybe implement it into your model if you would like, to help you identify where the current market structure is heading towards, okay? Now, segueing off of this topic, I am now going to continue on all the forms of DFR. So, I'm going to tell you guys the 3 DFRs that I look at. Okay, these are the 3 DFRs that I look at. And I'm also going to tell you why I trade Mondays, because it has a lot to do with DFRs. So, the 3 DFRs that I look at currently. Number 1, the weekly cycle, and I'm doing it in order of high to low. The weekly cycle DFR. That is the main DFR that I look at every single week. That forms Monday, 6 p.m., right when, or the Tuesday opening essentially, right? Monday, 6 p.m. is when that DFR close, or that DFR forms, and you can officially see the weekly cycle DFR, in which I'll show you guys right now how that looks like, right? So the DFR for the current range, let's go look for Monday here. It's just Thursday of last week, or this is Thursday, 1 hour range. Here you go. Excuse me. So, I'm going to go ahead and draw this out, and then I'm going to apply this to every single asset class, and I want you guys to see it on every single asset class. So, in this case, what do we have here? As you can see, this is DFR, right? DFR. In this case, for NQ, it's not the lowest low of the current day, right? Or the current day, Monday. the DFR is not the lowest low, but for ES and for YM, the DFR is a lowest low. What do I use DFR for? I use it for a multitude of reasons. When I am looking at the weekly cycle DFR, I am predominantly looking for a weekly cycle sequential SMT or a Kraken correlation regarding closures to form off of it. In terms of seeing weekly reversals, seeing your weekly power of 3 or your overall weekly analysis, I personally use DFR for a majority of it. If there's weekly cycle off of DFR, I'm anticipating a reversal to then price to then go up to its other objective, right? Whether it be buy side or sell side. In this case, Q1 DFR is mitigated on ES in Q3. On YM, we mitigated Q2. Notice how we create weekly cycle sequential SMT. We come back down, we then flip. Notice how there's a Kraken correlation amongst closures. We're not fully bearish yet, right? NQ is not manipulating extremely down. YM is, ES is. We drop down, we hit another PD array. We don't mitigate the weekly cycle DFR low, and we continue up higher. And we also go under true month open before going up and continuing higher in price, right? I'll go over that later. So in terms of using the weekly cycle DFR, the reason why I trade Mondays, and I'm going to explain to you guys why I trade Mondays now, a lot of the times. The reason why I trade Mondays is because if Asia and London are usually accumulating, Monday New York will probably host some type of intermediate expansion. The reason why I say that is because remember that Monday is going to give you the weekly cycle DFR. And if Monday is a no news day, that doesn't mean you can't trade. It means you just simply look for the right entry off of the right confluences using your model to then spot exactly where price may go to next, whether that be buy side, whether that be sell side. I don't know. That's all depending on your own strategy and current market structure, right? So when you hear everybody say, "Oh, you can't trade Mondays," that's not true. If you know how to trade Mondays, you can catch expansions. This week is a prime example. We just went straight up on Monday. Why? Weekly cycle DFR is forming. On top of that, monthly cycle and daily cycle at the lows. On top of that, we also had CPI and PPI this week. So the DFR is going to be relevant to the manipulation in price, in which you're going to see it expand when need be. I don't think we actually ended up hitting the -1 deviation. Yeah, we were just shy of it on YM, but we were pretty close. Whatever, it's fine. The next one I use is a daily cycle DFR. As I already mentioned before, I predominantly use a daily cycle DFR to find my intermediate ranges. If daily cycle DFR low or high is the low or high for Q1 for Asia, I am looking for price to reference it on one asset class to either create doubling or to just create a Kraken correlation where I can enter a continuation off of it. I use daily cycle DFRs every single day to get an understanding of where price is currently. I either look at the manipulation, I look at the projection, I look at the daily cycle DFR high or low in general just to see what price is doing. A lot of the times, I'm going to segue back into the weekly cycle. The weekly cycle DFRs, you probably won't see valid manipulations that will last and actually respect. So in this case, if I were to go ahead and swing grade this one that we have here, right, I think we hit a -1 or just shy of it, right? So again, as I mentioned, NQ and ES or any asset in terms of the weekly cycle DFR, if you have a pretty big DFR, it probably won't hit it, right? Because the DFR high from the projection is 270 points, right? So most of the time with the weekly cycle, it won't hit a certain level. Again, if it hits a certain level and it respects it, we are probably going to reverse, and you should look at it to form a lower time frame Kraken correlation to then support your narrative, short or long, depending on where we manipulate and if it's bullish or bearish, right? Back to what I was saying with the daily cycle sequential SMT, your daily cycle sequential SMT is going to be crucial to identify intermediate price delivery or price delivery for New York. Always. I always use it. I always love it. Now, the other one I use is the 90-minute DFR, and I'm going to show you guys which one. All right, I'm going to go on the 5-minute and show you guys. I do not use any other 90-minute DFR besides the 90-minute DFR of Q1 of Q3, meaning what? Q3 as in 6 a.m. to 12 p.m. Q1 of that range, which is from 6 to 7:30, is the only DFR that I use for the 90-minute. I don't look at any other 90-minute DFR. This is the only one I use, right? And same thing, you can use a projection to identify where price is more likely to reverse or hit terminus. I personally don't use the projections for the 90-minute, only because most of the time, if we manipulate, it tends to be a little bit higher or a little bit lower of that deviation, and it doesn't really give an accurate sense of where price wants to go. The only deviation that I actively use every single day is the daily cycle DFR deviation, nothing else, right? On top of that, the very last DFR that I use, the very last one that I use is the microcycle DFR, which I haven't been using too much, but it's still one that I like to reference, which is this DFR from here, Q1 to Q2. I go ahead and I swing grade this, and this is the only DFR before market open that I like to reference, okay? That is everything you need to know regarding DFR and how I utilize it. If there's any questions you guys may have, feel free to always ask, and I will gladly help you guys. Have a great day, and I'll see you guys later.